Let me start this video with a simple question. Can a salaried employee in India really build a 1 crore corpus through investing? Let's do a reality check. You've probably seen a lot of videos on YouTube where people show their 1 crore portfolios and talk about how they achieved it. And honestly, hats off to them for their incredible achievement. But here is something I noticed. Even though most of them started small, let's say with an SIP of 5,000 rupees, but somewhere along the way, their income shot up drastically. Some got an opportunity to work abroad and started earning more, while some got huge salary hikes, and some picked up side hustles or passive income streams. Eventually, they were able to invest huge amounts every month in the form of SIP and even able to drop huge lump sums into the market. Their talent and the opportunities that they got has actually helped them reach their goals much faster. But here is the problem. Not everyone gets those opportunities. Most of us are working in regular jobs, getting modest salaries, and get minimal to no hikes every year. And for many, a big part of the income goes into managing EMIs, bills, and sometimes even debt. And only a smaller portion goes into savings. While this is true, however, I feel this is not the main reason that we aren't able to achieve financial freedom. The main reason is we always think of only short term but not long term. For example, whenever market corrects, either we don't invest or we tend to sell and eventually lose the opportunity of buying something at a discounted price. When the market recovers, we regret the decision of not buying it when it was down. And to make the things worse, we start buying again when the market has already recovered. And this will eventually lead to buying something at a higher prices. This cycle continues for years and then we finally say stock market returns are a myth. On the flip side, a smart investor does the opposite. They buy when the markets are falling, they slow down when the markets are overvalued. And above all, they wait for years, letting the compounding do its magic over time. They will eventually retire with a good corpus and enjoy the benefits of their investments throughout their retirement period. And they eventually pass it on to their next generation. So, to summarize, we always have a trader mindset and want everything to happen overnight, but in reality, that's not the case. Wealth creation happens over years of consistency and patience. But again, there are a few traders who are actually good at what they do and are indeed making good amount of money. But unfortunately, most of the traders are incurring losses. So after all this Gyan, if I had to answer the question that was posted during the beginning of the video, is it really possible to build a 1 crore corpus for a salaried employee? And the answer would be yes, it is possible, but it will take a lot of time, planning, and especially patience. And that's exactly what this channel is about. I'm starting this journey with a combination of SIP and lump sum investing, and every month I'll be sharing updates on my portfolio and my progress towards the 1 crore goal. If you believe in the power of consistent, long term investing, don't forget to subscribe to the channel. And since this will be a long and evolving journey, I truly appreciate if you could wish me good luck in the comments. Your support will not only keep me motivated, but also encourage me to share these updates consistently and with full transparency. Before we dive in, here is a quick disclaimer. This is not a buy or sell recommendation, and I am not a SEBI registered advisor. This video is purely for educational purposes. I am just here to share my investing journey with you all and hopefully learn from some of the experienced investors watching this video. If you got some suggestions or feedback, feel free to drop them in the comments. Now, we are going to divide this video into two simple parts: strategy, portfolio update. In the strategy section, I'll walk you through how much I plan to invest, where I am investing, and how I am approaching each investment, and what indicators or signals I am using to guide my decisions. Then, in the portfolio update, I'll show you my current portfolio, that is, how much I've invested so far and what it's worth as of now. before we deep dive into the strategy section, let me first quote a popular slogan: save first, spend later. While this advice is great, the principle that I personally follow is save first, save next, spend later. Now, what do I mean by save first? Let's break it down with a simple example. Imagine a fictional character named Mr. A who works in the IT industry. He joined a company 5 years ago and started a 10,000 rupees monthly SIP with a dream of retiring early. Assuming a 12% annual return, his portfolio grew to around 8 lakhs in 5 years. Things were going well until a recession is hit and Mr. A has lost his job. With no emergency fund, he had to withdraw 1 lakh every month from his investments to cover his expenses. After 5 months, he finally got another job, but by then his portfolio had dropped from 8 lakhs to 3 lakhs. What if Mr. A had followed safe first approach? He would have built an emergency fund which is equal to 6 months of his salary and he would have kept it safely in, let's say, the bank fixed deposit. That way his long-term investment would have remained untouched. Now let's consider another situation where Mr. A didn't lose his job, but unfortunately he had a major health issue and needed surgery. And the hospital bill, it is around 10 lakh rupees. His company provided insurance had only covered for 3 lakh rupees, so he had to pull out 7 lakhs from his investments to pay the balance amount. But if Mr. A had bought a personal health insurance policy for a 10 lakh cover, he would have only needed pay around 600 rupees per month and his investments would have been safe. Finally, let's imagine the worst case scenario in which Mr. A has passed away unexpectedly. Without any term life insurance, the only financial legacy he left for his family was 8 lakhs from his investments and maybe a small ex gratia amount from the company. Had he bought a term life cover of 1 crore for just 1000 rupees per month, his family's financial future would have been secure. I know these examples sound harsh, but that's the reality of life. No one knows what might happen tomorrow. So my approach is simple. Be safe first, build protection. Only then I do focus on the saving and investing. This ensures that even if life throws a curveball, my investment journey stays on track. Now that we have covered the save part of the plan, let's move on to the save or invest phase. I'll be starting with a SIP of 10,000 rupees and will buy on the first day of every month. And the plan is to gradually increase this SIP amount every year. But here is the thing. Unlike many others, I am not going to commit to a fixed step up rate like 10% or 12% per year. Yes, on paper it sounds great, and there are videos out there saying just start with 10,000 rupees per month, step it up by 10% every year, and you will end up true course in 20 years. Sounds perfect, right? But let's break that down. By year 10, your SIP becomes 23,000 rupees per month. By year 15, it's 37,000 rupees per month. And by year 20, you are investing 61,000 rupees per month. Now that might work for someone with consistent high salary hikes. But let's be honest, with the way salary increments have been over the past few years, especially during the recession times, I personally don't think that it's realistic for everyone. At least for me, I am not confident about committing 61,000 a month in future. So instead of a fixed step up model, I'll be taking a flexible approach. Every year, I'll review my financial situation and decide whether I can increase the SIP amount or not. The goal is to stay consistent without putting unnecessary pressure on my finances and keep investing in a way that's sustainable and realistic. Now, let's talk about how I handle additional investments and lump sum allocations. I'll consider adding small additional amounts, let's say 500 rupees or 1000 rupees, if the monthly candle closes in red. This is a flexible approach, and the amount will purely depend on my financial situation at that time. And for lump sum investments, I plan to be very cautious and only invest during significant market corrections. For this, I'll be using a technical indicator called 2-period RSI, which I'll track on both weekly and monthly charts. If the RSI drops below 10, that's when I'll consider making a larger investment depending on the opportunity and my available funds. I'll explain more about this indicator and how I use it when we get to the stock selection part of the video. But in short, the idea is to stay disciplined, invest more when the market is undervalued, and hold back when the market is overheated or near all time highs. This way, I am not just investing consistently, but also strategically based on the market conditions. Now let's talk about where I'll be investing. I have decided to go with an index based investing strategy, and for this, I had two main options: the index mutual funds and the exchange traded funds. While index mutual funds are great, the only downside is that I cannot control the exact price at which my units are bought. That is, they are purchased at the day's NAV, usually after market closes. With ETFs, I can buy and sell anytime during market hours, just like the regular stocks. This gives me more control over my entry price, especially if I am planning to invest during dips or based on specific indicators. ETFs are designed to track various indexes like Nifty 50, Nifty Next 50, Midcap 150. So instead of betting on individual companies, I am investing in broader market segments, which lowers the overall risk and volatility. To build a well diversified portfolio, I have chosen the following three ETFs: Nifty Bees, which tracks the top 50 companies in India; Next 50 covers companies ranked from 51 to 100; and finally, the Mid 150 Bs, which tracks the companies ranked from 101 to 250. This way, I am essentially investing in the top 250 companies in India, which gives me exposure to leaders, challengers, and fast growing businesses, all while keeping it passive and cost effective. As for my SIP allocation, 5,000 rupees would go into Nifty Bs, 3,000 to Nifty Next 50, and 2,000 in Mid 150 Bs. This combination balances stability, growth potential, and diversification, making it an ideal mix for my long term goal of building a 1 crore corpus. All right. Right now, I am in the Zerodha console, and as you could see, my current portfolio value is around 3,26,000. So I'm like 97 lakhs away from my 1 crore goal. And right now, I'm getting around 14,000 profit, which is like a 4.5% on my investment value. And if you look at the holdings, like I explained earlier, so I'll be doing the SIP of 10,000 rupees into the Nifty Bs, Mid 150 Bs, and the Nifty Next 50. So far, I've invested around 1,88,000 into Nifty Bs at an average price of 264, and this Mid 150 Bs and the Next 50 I've recently started purchasing. So you could see the buy amount is around 7,800, 6,700 respectively. This bank Bs that you are seeing here. So basically I followed 3% down rule or strategy right from January 2024, and that strategy has given me around 11% on my current investment. So I've invested around 1,09,000 rupees, and right now the present value is around 1,21,000 rupees. So I'll not be investing any additional amounts into this bank piece. I'll just hold it for long term, and I'll be only focusing on the Nifty Bs, Mid 150 Bs, and the Next 50. Let's now talk about when I'll be doing the lump sum investment. For this, let me open the Nifty Bs chart and change the time frame from daily to monthly. As I mentioned earlier, for the lump sum investment, I'll be taking help of 2-period RSI. So let me add the RSI indicator. By default, the period shows as 14. So let's change from 14 to 2. And also, let's change the oversold value from 20 to 10. Let me change the color to red and overbought to green. Click on done. Expand this a bit. Yeah. So the strategy here is whenever this 2 period RSI value comes below 10, I'll be putting some lump sum investment. And if you have noticed, in almost every crash that happened over the years, this RSI 2 period has actually provided us a beautiful opportunity to put some lump sum investments and make some higher returns. So if we talk about the recent crash happened due to the FIA sellings, so it has given us an opportunity here. And if we go back to the Russia and Ukraine conflict, it has actually come below 10 at this point of time. And of course, the COVID crash, it has given us the indication here that a lump sum investment could be done. And let's go back, see where all we got an opportunity. So I see one more opportunity in 2016. Not sure what this crash was about. Let me know in the comments if you know about this one. And I could see somewhere in 2011 where it has given you a nice opportunity to put some lump sum investment. Again, we had a crash in 2008. So again, it has given a beautiful opportunity here. That was my portfolio update for this month. As you can see, this is just the beginning, and I know the journey ahead is going to be long, filled with ups and downs. But that's the beauty of long term investing. It's not about timing the market, it's about time in the market. I'm not here to promise overnight success or give financial advice. I'm just a regular salaried investor sharing my real journey with real numbers. If you found this video valuable, do give it a like. And if you are also someone working towards financial freedom, subscribe to the channel so we can grow together. And don't forget to share your thoughts and suggestions in the comment section.